joining us, Richard Harris, Chief Executive at Port Shelter Investment Management. Richard, hi, morning. Chairman Powell, ended on a note where he's leaving the Fed with interest rates which are not likely to go down in the near future. Do you think that that could be reversed when the new chair comes in, given the fact there's a strong opposition and dissent coming in for the language of easing itself?
Well, no, I don't think things will change very much. I mean, when Kevin Walsh comes in, he's only one vote among many. He will almost certainly follow the Trump line. You could see that in his confirmation hearings that he was absolutely following the Trump line. So Trump has a couple of people who he's appointed to the Fed board in order to try and influence them politically. But I think in the short term, that's not going to happen. Powell will almost certainly stay in place, and I felt that was the case all the time. He's shown a lot of backbone, I must say, in terms of standing up against Trump. First, in humiliating him on site by showing Trump that his numbers were actually wrong. And secondly, by coming out in January and basically saying that giving the view of the Fed that it was independent, that it wasn't going to be influenced by politics. So it never surprised me that he's looking at staying on. And I think he'll do that and will certainly block an appointment by Trump to the Fed for another couple of years.
Right. So, Richard, just wondering, how do you think the Mag 7 earnings and the kind of capex that they continue to announce, how's that going to go down with the street? Because I remember before the Iran war broke out, it was all about whether this is a bubble waiting to be burst, and people were questioning the profitability of the Mag 7 capex.
Well, don't forget that most of the new profitability that's come through has not actually come through because of AI. It's come through because of an increased use of the cloud. So we're seeing Meta, which doesn't really have much of a cloud business, hold back, whereas companies with a cloud business, like Amazon and Google, have done rather well. And I think what we're actually seeing is the dawn of some sort of shakeout in AI. Google has its nose ahead because through Google Gemini, we all use Google for search. So it's likely we're just going to continue to use Google as certainly one of the key AI providers. And then after that, it's a bit of a race as to comes up with the best product. Well, at the moment, the best product seems to be Claude by Anthropic. But these things are flip-flopping all the time. And I think very much as we saw in the dot-com era, when there were many dot-coms, but only a few survived, I suspect that this is going to happen to AI as well. And I think we're seeing the early stages of maybe this start to shake out.
Right. Richard, hi. Give us a sense with regard to this divergence in the Fed in terms of a view. You did suggest that the new Fed chief will have only one vote technically. Talk to us about, therefore, what the policy holds in store, in your opinion, over the next 12 months. There's obviously a couple of rate cuts which are being penciled in. How realistic is that?
Well, as we come closer and closer to the midterms, it's going to become harder for many of the members of the Fed to actually move because they'll be accused of acting politically. Now, the key members, Miran and Walsh, or Miran wants to go, but he'll probably have another very pro-Trump governor. They will, of course, be speaking very loudly for a cut before the midterms for political reasons. But typically, the Fed does resist that, and there are enough independent members, I think, on the Fed to do that. So pretty well from August, it's going to be tough for the Fed to do anything unless they see any major changes in the markets. And the general thinking at the moment is that inflation is going to be elevated and it may well go up. And that hasn't actually come through in the numbers yet, the kind of gas prices we're seeing in various places. Even Texas, which is doing quite well because of the rise of the oil price, will have inflation. So if those inflation figures come through, then I think the independent members of the Fed are not going to look to cut. And there may even be some talk of rising, but I think that they won't do anything, say, from around September onwards before the election. After that, I think it's very much data dependent. My guess is that inflation will remain elevated, but the economy will still look okay. So they may even think of rates going up. But don't forget, if the economy starts to slump as a result of inflation, then we'll certainly see rates start to come down. And that's only right, because that's how the system works.
Interesting times, Richard. Thank you very much for joining us today. That
Thank
was
you.
Richard Harris, Chief Executive Port Shelter Investment Management.